Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Alex Matthew, and this is an earnings conversation. We're speaking to the management of Welspun India. Joining me now is Dipali Goenka, the Managing Director and Chief Executive Officer of the company. Thank you so much, as always, Dipali, for taking the time. I see the numbers and I see improvements across several metrics, not least of which is the PAT number, which is more than doubled on a year-on-year basis. EBITDA margins have expanded quite a bit. Seemingly, the pressure that you were facing on the cost side is ebbing just a bit. But let's talk about the revenue number first. It is flat on a year-on-year basis, but up 15% on a sequential basis. What can you tell us about the key drivers this quarter?
So the key drivers are basically, and I think we spoke about it as well, Alex, the inventory destocking that continues. And I think that's what has happened. Earlier, as the commodities rose, whether it was cotton or freight, retailers had inventory that was far more expensive than, so hence now as the destocking continues for maybe one more quarter, they'll be over this hump, and the regularity of demand will start flowing in. And I must tell you one thing, while commodities have ebbed, the whole destocking is getting to be behind us. Markets are going to be, and I will put in a word, and it is going to be cautiously optimistic. And that's something is going to be in these dynamic times. Though we look at a positive trend, but again, we will be cautiously optimistic as we look at the way forward.
You mentioned inventories, and this is something I think you've been speaking about for about 3 quarters, if I'm not mistaken.
Yes.
And I think the goal was to remove high-cost inventories by the end of March. We're likely to take a little longer, is what you're saying?
Maybe a quarter. Most of it is behind them. I definitely feel it is behind them, but just to be a little bit more conservative, quarter one, I think it will be absolutely ready to take on more, because quarter two is the time where we start manufacturing for the holiday season as well. That is in in November and December. So everybody starts planning for that. So yeah, that's the way it is.
Okay, so let's first talk about the cost aspect of it, because that's where, even in the statement that you've made, you've said that cotton has come off. You say that freight costs have actually come back to pre-pandemic levels. And I know that you can't absolutely predict this. You have to stay nimble. But even when we spoke last time, you had expected margins to stay more or less where they were, but there is a substantial improvement from there. So when you say cautiously optimistic, are you also referring to the cost side? And what is your expectation there?
So, Alex, when you spoke about the margins and when I spoke, it is a key matrix of manufacturing, cotton, commodities, everything together. So as the demand is trying to come back, definitely the manufacturing starts moving in ahead, and hence the margins also start coming in, right? So it is a play of everything. I also want to add on one more thing here. For us, when we talk about Welspun India, it is not about just the core business that we basically focus on as well. But I think for Welspun, we are focusing on emerging businesses that are our brands, our licensed brands, advanced textiles, and flooring,
Yeah.
which actually has grown, and contributing 34% to our top line, and has grown by 24% this quarter. And we feel that that's going to be an important part of a total basket of Welspun India, core plus our emerging businesses going forward as well.
Okay, on the demand side, and here I want you to talk about the export market as well, because again, here your expectation based on what you knew at the time when we spoke last was that you anticipate that it'll take at least till the end of H1 for things to start flowing back and for you to start see that demand recovery coming in. Is this still the base case, or do you know something different now that will perhaps require you to either bring that forward or push it down the line?
It's going to be a mixed bag, Alex. And I feel the reason I spoke about half one is that, as you prepare for the holiday seasons, the mood is absolutely, on the upswing. And that's where I felt, and, the inventory destocking would have happened, and everything would have been behind us. And I still maintain that, though I say that it could be a little bit ahead. maybe a little bit more upside or uptake, maybe in the quarter ones or the quarter twos. Also, you will see that happening, because definitely there is that little upswing as we see. But again,
where is that upswing happening? I'm actually curious because of the various places that you play in. Is it linens? Is it the brands business? Where is it that you're seeing that optimism?
So let me just give you a breakup of where we are. If I talk about our core businesses, and if I talk about the countries of the core business, I think America is around 34% of the home textile business, and there we see that uptake owing to the inventory destocking that we are seeing. UK and Europe continue to be a little bit softer because the economies still haven't come back. However, our domestic business is something where we are seeing that upswing. We are seeing a growth of around 30% here, and it contributed around 8% to our top line, and that is something that we want to grow, and we are very, very optimistic about, because India is that North Star that we are looking at, right? And when we talk about our emerging businesses, our flooring actually grew. India flooring business grew over 80%. Global as well, we are seeing that offtake in USA, UK, Middle East, and Australia as well. Advanced textile as well, as the things are rolling up, we have seen a growth of around 45%. So, we continue to see this mixed bag that comes in from Welspun, along with our licensed brands. Our licensed brands actually grew by 60% this quarter, and that will continue to add on more shelf space. You know that we have a license in UK and Europe as well now. US, we have a license, so that will continue to add on more shelf space, despite the whole thing about the recession that keeps on coming in.
I'm curious about capacity, and you were engaged in expanding capacity in quite a few verticals as well. I think quite a bit of that will be done by now, right? So what can we expect in terms of utilization? Because with that added capacity and with the demand scenario, I think we were not at levels that we have seen in the past. What is your expectation in FY24?
So when we talk about the core business, I think we will be over 90% kind of a capacity that we're looking at, being a little conservative there, but yes, that's where we're going to be in the terms of core businesses. But when we talk about our advanced textile, we'll be around 50 to 60%, looking as the things ramp up there. When we look at flooring, we'll be around 65 to 70% there too. So that's what we are looking at, it ramping up now as the demand starts coming in.
And I think that there is a significant improvement based on what we've seen in the last financial year as well.
Absolutely.
I want to speak about debt, because I see that there's a substantial reduction in the short-term debt. What is contributing to that? And I think that your debt to equity ratio right now is the lowest that it has been in at least 5 years, if I'm not mistaken. Is that a measured, is that a premeditated move that you've made? And do we see it at that level?
We will continue to see it at that level. And I think there's a lot of work. The CapEx is behind us. And we definitely have taken that lot of prudence in our, the inventory reductions, everything as well. So I think you'll continue to see this reducing. I mean, we are looking at around, our core business in a couple of quarters to be net zero. And when we are looking at our these upcoming emerging businesses where we have invested, we will see that this year we'll be around below 1,000 crores in the net debt, and as we maintain, and we have continued to maintain, that by 2026 we'll be absolutely net debt zero, and that will be something that we'll continue to do, Alex. The only thing that we will hold on is the inventory on cotton, which definitely is something that we're holding for the next 6 months.
Okay. Final thoughts on how FY24 is going to pan out. And I know that you began this conversation by saying that you're very cautiously optimistic. And again, that you're expecting that maybe before what you thought earlier, which was end of first half, you can see some level of increase in demand coming through. With all of that as the context, what are your key expectations for FY24? Do we possibly see a double-digit growth in revenue, or is it too early to tell?
So, Alex, we are maintaining a growth of around 10 to 12% in
Sure.
overall business, and the EBIT of around, say, 15% in the overarching business in the scheme of things. But that will be kind of a bag of around core business and emerging businesses as well. Things still will be something that we always will maintain at Welspun, the prudence of inventory controls, debtors, and the others as well. So, owing to all that, we will be completely cautiously optimistic, but this is what we are looking at the next year.
And final question on the margins, because I didn't ask about that. It is, in fact, if I can call it that, better than you had expected in the fourth quarter. Do we continue to expect margins at this level, ceteris paribus, assuming that we don't see a major swing in the oil prices and the energy prices, etc.?
Yeah, Alex. I think this is what we will maintain, and we will continue to look at. And I must tell you, when you talked about the oil price and the energy basket took us by surprise last year. But you know that our capex of around 300 crores, we're investing in our renewable energy in Anjar. I will actually add on a very important thing. A lot of times the questions come in that why Welspun's being so, heavily invested in the ESG bit. And I want to say that we want to do business, sustainable business in a sustainable way. So definitely, whether it is water, the prices definitely get, we definitely look at controlling our prices even by, because the STP, in Anjar, we don't use a drop of fresh water there. Energy, I mean, definitely there won't be any surprise. So I think in looking at everything, we are looking at controlling how much as we can, looking at doing the business in the sustainable way.
Well, Dipali, it's always a pleasure speaking with you. Thank you so much for taking the time. Wish you all the best for the rest of this financial year.
Thank you, Alex. Thank you very much.